Okay, good. Now we're live on Instagram. Cool. Now we're live on Instagram. Interested in starting stocks? Where do I start? Okay, I'm not sure. I heard Robinhood's a good spot, but I can't advise you on where to start with taxes. But I can tell you how it's gonna work for taxes. I mean, for tax purposes. Try try dropshipping. Hey, on a commercial line, study real estate and plan to get into stocks. Nice. Tomila Cosmetics. Who else is planning on to get into stocks soon? Or who else here owns a business or is thinking about owning a business? Who else? I know there's some other people. I know we got some quiet people. There's some people who just watch this live. They don't say nothing. They just sit there and watch. But yeah, so let's get in. This live we're going to be talking about, how taxes work for stock purposes. I'm going to go over really briefly. This live is intended to be very basic and easy to understand. At the end of the live, I will answer questions about this. Now, guys, remember, I'm just telling you guys how the taxes work for the stocks is how the taxes work for stocks. I'm not like a stock professional. So first thing that I want to cover is that, let's say, okay, so typically when you have taxes, when you have stocks, you have an account, right? So you have some type of account. So, and this is usually called your brokerage account. Brokerage account, right? And so you typically, how come no one didn't tell me that it wasn't mirrored? Okay, so it's in mirror mode. And Instagram, I'm really sorry. I don't know how to mirror the image so you guys can see so it doesn't look like you're looking at it backwards. Yeah, I'm sorry. I wish I did. But if Instagram, if you can tell me how to mirror my image, I most definitely will. Okay, so in stocks, you have a brokerage account. And typically, that's where you have money there. So when you're exchanging and you're selling, let's say you have something for $100. Okay? Let's say you bought a stock for $100. And then that stock raises in prices. All right? The stock raises in price. And now it says your stock is worth $120. Okay? So you put $100 in, you invested the $100, and now you're looking at your brokerage chart and says, wow, your stock went up by this amount of percent, 20%. You now have $120. So the question is, do you pay taxes on that? Right? When you're looking at your account and just because it goes up, do you pay tax on it? The answer is no. And this is why. This is what we call an unrealized gain. Okay? I want you guys to remember that. Put it in your head. Put it in your head. Right? Unrealized gains. So when you're looking at your account, your stock account, your brokerage account, and you see, hey, it's trending up, that doesn't mean you have to pay tax on it because it's an unrealized gain because it could go back down. Okay? If that makes sense, just give me some type of thumbs up or emoji. If that makes sense so far, that when your account, just because your account goes up, that does not mean you have to pay taxes on it. If that makes sense so far, what's up, Simply? Welcome to the live. If that makes sense so far, let me know. Yes, so it does. Thank you for that, sophisticated you. So it makes sense. Okay? What if you take money out? That's what we're going to get into next. Okay? So, any questions on that? So it seems like it makes sense. I got a yes and I got a question. Okay? Makes sense? Okay. So it's going to be considered an unrealized gain. Now, when you sell the stock, okay? Let's say you sell the stock. Let's say you're like, oh, dang. If I sell the stock right now, I get $20. So when you sell the stock, let's say you sell it at $120. When you finally sell it, that's what you call a realized gain. Okay? When you sell that stock for $120, that's what you call a realized gains. It's rough starting out, but yeah. That's what you call a realized gain. And this is what you pay taxes on. So unrealized, no taxes. Realized gain, taxes. So when you have stocks and you sell it for a realized gain, that's when you pay taxes on. You do not pay taxes on your unrealized gain. You pay taxes on your realized gain. So when you actually sell the stock. So just because you're looking at your account, you're like, oh wow, it went up. That's so cool. That doesn't mean you pay taxes on it. You pay taxes on the realized gain portion. Now the question was that I believe someone just asked, was what happens if you take the money out? Okay, so it doesn't matter whether you take the money out or you leave the money in. What matters is it an unrealized gain or realized gain? So let's say you sold the stock for a realized gain, okay, but you kept the money in. It doesn't matter. You still sold it for an realized gain, so you're going to have to pay taxes on it. Thank you for the gift, Mommy. Hi, I'm Connecticut. Stay blessed. Happy holidays. Thank you so much. That was so nice. Is there a certain amount that you have to gain to pay taxes? So any type of gain, any type of realized gain. Is there a fixed rate that you're taxed on by your realized gain, or is it based on the exact amount? I'll get into that next. That's a really good question. Now, before I get into that next question, does this make sense? Give me some type of emoji or yes if this makes sense, and I can move on to the next question. Otherwise, ask me questions right here, because the purpose of this live, guys, is for you to leave this live understanding how taxes work on stocks. That's basically. So I want you guys, so it makes sense so far, okay? Got it. Okay? So let's talk about how you're taxed now. All right? This is going to be a very simple thing. How you're taxed. All right? Makes sense. Do you have a YouTube? Yes, I have a YouTube. Please subscribe. Guys, you guys are so cool. I'm almost at 100 subscribers. So cool. All right. Anyways, so let's talk about how you're taxed. So I'm gonna write for people. Oh my gosh, woohoo, goofy. For people just joining, I'm gonna write that back at the top again. Okay. So you guys can remember, unrealized gain equals no taxes. Okay? Realized gain equals taxes. Okay? No taxes, taxes. Okay? Makes sense? Cool. Awesome. Got it. Woohoo. Makes sense? Got it. Cool. Awesome. Now let's talk about how you're taxed, right? So, and I'm gonna do my best to explain this in a very simple way. You're taxed two ways when it comes to stocks. It's either a short-term capital gain or a long-term capital gain. It's either a short-term capital gain or a long-term capital gain, okay? So, if it's a short-term capital gain, that means you held on to it for less than a year. If it's a short-term capital gain, that means you held on to it for less than a year, okay? If it's a long-term capital gain, you can pretty much guess what I'm about to say. If it's a long-term capital gain, that means you held on to the stock for more than a year. So you bought the stock, you held on to it, okay? Now that we've done that, oh my God. Come on. Okay. All right. Now that sorry guys, it kind of froze right there. I'm back. It kind of froze right there, but I'm back. I'm glad you guys didn't leave. I'm still here. So now that we understand that the short-term, long-term capital gain, Short-term capital gain, short equals regular tax rates. Okay? So short-term capital gains, if you hold it for less than a year and you sell it, you're gonna be taxed at regular tax rate. So whatever your tax bracket is. So you're gonna want to Google your tax bracket, look how much income that you have, right? And figure out what your tax bracket is. And you're gonna be taxed on that gain. So I'll break it down a little bit more. So if you are in the 30% tax bracket, right? Let's say you're in the 30% tax bracket and you have a stock that you bought for $100. You sold the stock for $200. Okay, so let me walk through that again. So you bought a stock for $100. You bought a stock for $100. You notice in the app, in your app, you notice that it went up to $200. Okay? So you noticed it went, but you didn't sell. You just saw that it went up by $200. You seeing that and recognizing that it went up by $200, that's an unrealized gain. Okay? So when you see, you're like, oh my gosh, I'm up. That is an unrealized gain. We don't pay taxes on that. Now, when you're like, oh my God, I'm up, and you sell it, you actually sell it, you lock it in, you lock in that price, that is what we call a realized gain. Okay? So in this scenario, if we were to actually sell this stock, our realized gain is going to be $100. Okay? So our realized gain in this, I'm just call it RG. Our RG is $100. Okay? So once we have a realized gain, the question is now, how long did we hold on to that stock? Or how long did we hold on to that asset? Okay? If we held on to it for less than a year, short-term capital gain. Okay? Let me just write this out. Because I know people are just joining, and I want you guys to really understand this. Okay? Short equals less than 1 year. Long equals more than 1 year. Okay? Got it. These are really things you're going to have to report, right? So when you sell that stock at a realized gain, you're going to ask yourself, did I hold on it for less than a year or more than a year? Okay? If you held on it for less than a year, it's short. You held on it for longer than a year, it's long-term capital gain. Now, what's the difference? Your short-term capital gain, you're taxed just like you are for your tax brackets. For your short-term capital gain, you're taxed just like you are in your tax bracket. So if you are in the 30% tax bracket and you have a realized gain of $100, you're going to pay $30 in taxes. Okay? Now, if you have a long-term capital gains gets special tax brackets. They get their own little fancy little tax brackets, right? And guess what? It's as low as 0%. Okay? So it's as low as 0%. Seriously, guys, look it up. So if you held on to the stock for longer than a year, if you held on to longer than a year, you'll pay 0% in taxes. Because that's the bracket it's in. It's in its own bracket. When you hold on to it for less than a year, the gain is in your bracket. So whatever your bracket is, that is where your gain is going to go. If it's a long-term capital gain, it gets its own little special bracket, which is like between 0 to 20%, so it's as low as 0%. So that's why you'll hear a lot of financial people or tax investors. I mean, not tax investors. Really like investors that says hold your assets for at least a year because they're taxed at lower rates. Okay. If is there any questions on that? Did I explain that clearly? Let me know. Give me a thumbs up, an emoji. Scale 1 to 10. Does that make sense? How clear was that? Scale 1 to 10. Scale 1 to 10. Thank you so much for sharing the live. Yes, 10. Okay, sweet. Okay. 10. Okay, thank you guys so much. Yeah, so that's my goal, is to make sure I'm communicating this very well. Now, if you have any questions on it, don't feel free to ask. I ask questions all to this day, but that's how pretty much taxes will work when it comes to stocks. I got one question. Is it possible not to pay any taxes at all? Yes or no, please? Yes. It is possible with tax planning, but the easiest way to not pay taxes is start a business. That's what I do. I help people. I help business owners pay no taxes, or I help them save on taxes. Right? But the save on taxes, you have to already be paying taxes. Yo, what's up, anime boy Danny? What up? What's poppin'? We're talking about stocks and taxes, guys. If you just missed it, just ask about what I missed, and I'll cover that. Thank you. All I need to know. Stay blessed. I'm so glad that I was able to answer that. Where are you located? I am located in Dallas, Texas, but of course I have clients nationwide, so I'm able to help anybody. That was a great question too. What's up, Instagram? I'm so sorry that it's flipped. Like, I don't know why. If anyone watching this can teach me how to unflip this so you guys can see it, that'd be great. Can you explain RG again? Yeah. So RG stands for Realized Gain. So I'll explain it again. So okay. RG stands for Realized Gain. So let's say you get $100, right? You have $100, right? And you download an app, like you download something like Robinhood, and you put $100 in Robinhood, and you buy stocks worth of $100, right? So you buy stocks worth of $100, right? $100. You buy. Hold on. You buy $100. Okay, so you buy stocks of $100. Okay, and then you notice, right? So the next day you log into that. Okay, the next day you log into the app. And now it says the stocks that you spent $100 on is at $200. Okay. Alright. So you bought stocks of $100. The next day you notice that those stocks are at $200. You noticing that, you seeing that, is what we call an unrealized gain, and you do not pay taxes on that. Okay. What's up? It's Yoda. What's up? All right. Oh, hi. You say I'm way back. Okay. So you notice that, right? That is what we call an unrealized gain, and we do not pay tax on it. So when we notice that, that's fine. That's nothing. Now, let's say we say, oh, snap. If I sell this right now, I can make $100. I could double my money. I could get it back if I just happen to sell right now. And let's say you make the decision to sell. So you sell. You sell at $200. right? So you sell at 200. Okay. So your gain, so once you sell, you now have a RG. Right? Hold on. An RG. A realized gain of $100. Okay? So when you notice it, you have a UG. Right? You have a UG of $100. Okay, so you bought $100 worth of stocks. You notice that hey, it's $200. It's $200, right? So now you have an unrealized gain of $100. Just it's because you noticed it. You have an unrealized gain of $100. That means you don't pay any taxes. Now when you're like, oh snap, I can sell it and I can get my money back. I can double my money back to $100, right? Once you notice that. And once you sell it, once you actually sell it, you have an RG, the realized gain of $100. This is where you pay taxes at. The realized gain. So no taxes. Taxes. Okay. So that is the difference between an unrealized gain and the gain. That makes sense. Same thing for Bitcoin. Oh, okay, thank you. Yeah, if that makes sense. Thank you for sticking around. Thank you for following. So that's what the RG stands for. And I try to make this as straightforward, as simple as possible. So if that makes sense, it's, hey, yeah, okay, now I get it. And I'm okay with repeating myself if I have to. Nothing wrong with that. So feel free to ask those questions because this is a lot to take in. And it can get confusing to do it. How to get rich 101 by being yourself and providing and solving problems for other people. Will you pay taxes if you sell then reinvest? So the thing is when you say sell, right? Yeah, but so this is where it can get complex because then you have something called a wash sale, and that's if you like. If you sell it at a loss and then you rebuy it within 30 days. So it's possible. But typically when you think that you sell and you made a profit, I just want you to automatically think, hey, I have a realized gain and I'm gonna have to pay tax on it. So the question then is it a short-term capital gain or a long-term capital gain? So once you sell it, yeah, you can buy it again, but at the end of the year, your losses offset your gains at the same time too. So basically, when you sell your stock with profit, it's taxed if you sell it within a year. Yeah. So if you sell your profit within less than a year, I mean, if you hold on to the stock and you sell it for a profit, okay, I've just messed it up. If you hold on to a stock for less than a year and you sell it for a profit, you're going to be taxed at an ordinary rate. You're going to be taxed just like you are in your regular tax brackets. The goal of investing is to get in the special tax bracket, the fancy tax bracket, the luxurious tax bracket, the beef it up tax bracket. And this is called the long-term capital gains. It's simple to get into the nice tax bracket, the luxurious tax bracket. All you have to do is hold that asset for at least a year before selling it, and you get taxed as low as 0%, right? And if you don't hold on to that stock for at least a year, you can get taxed up to 39% or 37% in 2020. Great question. You need a Roth IRA account with no taxes to take the money out. Will I still get taxed even if I sold at a loss? So if you sell it at a loss, there's no taxes because you don't have a gain, right? So you don't have a gain. So gain means you made money. So gain means profit. If you sold it at a loss, and it's like, let's say you sold at a loss, and that was the only transaction you had. That's it. Then now you won't have to pay tax on it. You only pay tax on the gain. Bro, read the comment. So yeah, if that makes sense. So Your losses can offset that. So, hey, been watching you for a while from TikTok. As I was wondering, you are familiar with a little bit. I have a little bit with California's tax code, but it doesn't stop me from working with anybody in California. Everyone's situation is different, so I'm down to help you out. Can a person hold their stocks for as many years as they want? Yeah. There's no limit. From what I'm aware of. But once again, I'm not like a stock professional, so it might not make the best decision for holding that long. But I can only advise you guys on the tax part, not the actual investing part. You still know, right? I specialize in taxes. If I specialize in stocks, I could be more comfortable advising you guys. But yeah. So guys, if you're just joining, we're talking about the unrealized gains and the realized gains when it comes to taxes. Unrealized gains, you don't pay any taxes. Realized gains, you pay taxes. Once you have a realized gain, the next question is it a short-term capital gain or a long-term capital gain? Someone said the military gets a lot of tax breaks. They get tax credits and they get things like that. So, what's the best way to dodge the IRS? There's really no way to dodge them, and I wouldn't encourage that. But I'm not 100% on all the military things for the military. So, oh shit, this is a good lesson. Just popped in. Yeah, guys, if you miss this lesson or the whole thing, I am going to repost it on YouTube. It'll also be on Instagram, but unfortunately, the only thing with Instagram is like I don't know how to flip it. So anybody watching on Instagram, if you can teach me how to flip so you guys can read it clearly, that'd be awesome. But on TikTok, I can flip it, but on Instagram, I can't. So I'll be reposting this. Was about to ask the tax credit info. I'm not. Yeah, they have different like. Military's always get like some special benefits, so and support your troops, so I respect them. How we know which stocks to invest? I want to get a Roth IRA, but have no idea what to invest in. I wish I could help you on that, but I'm not like a stock professional thing like that, so I'll be doing you a disservice to answer that question. So I'm really sorry. I made $40K trading stocks and lost $20K. Do I have to pay $20K? You're going to pay the $20K. So guys, your stock losses can offset your stock gains, right? So just like we have, we have a unrealized gain and we have a realized gain. You also have unrealized losses and realized losses. So let's say you put $100 in, right? And then the next day it says, hey, this thing's only worth $80 now. You say, dang, you have an unrealized loss. Because you haven't really incurred the loss yet till you actually sell it. So it's unrealized. Once you actually sell it, then you have a realized loss. So you can use your realized losses to offset your realized gains. Hope that helps. Losing money can be written off too, yeah. Because isn't there a possibility that we can lose our money, but that's put in? Because isn't it a possibility that we can? Yeah, it's possible. Fat bad, thank you. Love you too, bro. Yeah, so you can use your stock losses to offset your stock gains. Absolutely. Absolutely. You want to have, and that's with anything, your business as well. So, yeah, that was a great question. And guys, if you're just joining, I was covering how taxes work when it comes to stocks. If you missed it, it's going to be right back on YouTube. Hey, 24 in the chat. Woo woo. What up? 24 in the chat. What's up, Crystal Customs? Did you change your picture? All right, bet. Yeah. So we were talking about stocks and taxes. Really, guys, what you really want to know. And I'll briefly cover it up again if you're just joining. I'm a tax lawyer and I love your TikTok. Oh, thank you so much. That's so cool. Tax lawyer in the house. We got a tax lawyer in the house on the Instagram. No, it's been the same. Okay, cool. What's up? What up? So guys, just to go over this again. If I made $1K on a job, I stayed for a month, how much do I pay in taxes? So if you made $1K at your job, that's a $1,000 in your W-2 employee, if you really want to ask yourself, what did you make for the whole entire year? Not just that one job. So if you just only have that one job and it's your W-2 employee, you may not even have to file a tax return anyways. But you still should, but you may not have to. Now, let's say you had other income throughout the year. Maybe you started a business. Maybe you had another contractor job. Maybe, I don't know, you received unemployment. You really want to add up your total amount and look at what your standard deduction is to see if you're required to file a tax return. Either way it goes, you should file a tax return anyways. Use TurboTax. Just plug in your little numbers. And TurboTax will say, hey, you have a refund, or hey, you're not required. It takes like less than an hour. I would still do it anyway. How much do vintage resellers pay in taxes, and how do they pay taxes? So vintage resellers, they're going to pay the same amount of taxes as someone who does DoorDash. Vintage resellers are going to pay the same amount of taxes as someone who do OnlyFans. Those pay the same amount of taxes as any other small business owner. Especially, and it really depends how you set up. So if you're LLC, Sub Proprietorship, you're going to pay the 15.3% in self-employment tax. And then on top of that, you're going to have to pay federal and state taxes. So I hope that helps. So really, you're a vintage reseller. You really want to have your cost of goods sold in order. So you want to be tracking those expenses in your inventory. How do we file our taxes with $1,200 stimulus check package that we received? I forgot the form that they sent out, but everybody who received the stimulus check, the IRS sent you another form, like a couple months after that. You're going to use that, but you don't have to report that $1,200 stimulus check as income. That was a really good question. Hey boss, I have a question. I just opened up a small gym, but I want to know, how can I write it all off? The only problem is I didn't get my LLC until after I invested in the business. I also want to be able to write off my truck as a business bit because I do have advertising. So good news is that you don't need an advertisement on your truck to write off as a business expense. I have clients that we deduct trucks and vehicles all the time. You don't have to have your logo or your market on it to write the truck off. So that's good news. Second good news is you can still write the truck off. And I'm guessing it's a pretty nice truck. So you want to look at, hey, do we want to depreciate this, or do we want to use the miles? If it's a pretty nice truck and you made a pretty good investment on it, we may want to look into like Section 179 or bonus depreciation. In order for you to qualify that, you have to use your truck at least 50% for business. If you're not using at least 50% of business, let's say you're, I don't know, picking up chicks, going to the movies, whatever, bro, that's your life. But in order for us to take this deduction on we want to use this Section 179 with bonus depreciation, you have to be using your truck at least 50% for business. As far as the gym itself, what's important is, hey, did you actually buy, the property, or are you renting out a space? If you're renting out a space, you can deduct the lease payments. If you actually bought a physical property, we're going to want to look at depreciation. Same with the equipment, same with the training, same with the employees. If you have not made any money yet, you're probably in startup mode, and we really want to look at that. So what's really important in your situation is that, hey, you work with a tax professional, work with a bookkeeper, get started with bookkeeping if you haven't already, to make sure you really can track the space. Yeah, so you use the 70% you're renting out. So you can. So if you're renting out the space, you can deduct the rent Space payments. What's up? I love turtles. Would Texas be a good place to live? Absolutely. I live in Texas. What's up? If my tax deduction is more than my income, do I get a difference back? You only get you only get a difference back if you gave the government some type of money or you qualify for like a refundable tax credit. But yeah. 2 times 1, I need to know. 2. My truck is my main source of business, but I bought it back. I bought it under my name. So yeah, even if you bought your truck in your own name, it doesn't matter. It doesn't matter how you bought your truck. It matters how you use it. It doesn't matter how you bought your truck. If you put a logo on it, if you got, I don't care if you got 2 tires on it, right? You got 2. That doesn't even make sense. But I just want you to understand that it doesn't matter how you purchased it. It matters how you use it, at least in the IRS eye. So it matters how you use it. And you told me 75% for business. Okay, cool. Let's write off 75% of it. Let's do it. Let's write off 75% of it. So it doesn't matter how you purchase it, guys. What's up? I love turtles. I'm taking a tax class right now, and all of this is reviewed to me. Love you, vid. Awesome, you're taking a tax class. Ask me one of your questions. That'd be so cool. Thank you. You're welcome. I hope I was able to help you. What if I bought items this year before I filled my LLC? So you don't need it. So guys, you don't need an LLC to deduct business expenses. The only thing you need is a business, right? You don't need an LLC to deduct for business expenses. That's the first thing. So you don't need an LLC. Second thing, if you incurred these expenses before you start your business, you're in startup mode. Okay. So I do have a video on that I covered like 2 days ago. So it's going to be under the 2020 unemployment tax strategy. Just skip around to where I talk about startup costs, and that's what you're in. You're in startup mode. That was a great question. Are Texas taxes low compared to other states? So Texas does not have any state income taxes. But that doesn't mean that all the taxes are low, because Texas also has high property taxes or sales taxes. But when we're talking about income taxes, Texas does not have any income taxes. Sorry, didn't mean to send that emoji. Accidentally pushed the button on the screen. Well, I don't care. Ain't no apology over here. Everything good. All good. But doesn't splitting use for business personal account items jeopardize? Yeah. So yeah, that does. Yeah. So that's what you call something you call piercing the corporate veil. Now, it's really important if you're an LLC that you open up a separate bank account, because the whole purpose of an LLC, their primary purpose, people form LLCs, is for personal asset protection. Personal asset protection. So that means whatever happens in the business, I don't want you messing with my personal life. Well, how can you tell them, hey, whatever happens in my business, I don't want you messing with my personal life, but yet you got personal expenses in your business account? So now they're not looking at you like, we're not gonna take this person serious. Like, they got personal expenses in their business account. There ain't no LLC. They're not gonna take you serious. So that's why it's really important that if you're asking your state to separate you from to separate your business life from your personal life, you better behave in the manner that you're separating your business life from your personal life. The easiest way to do this is to get a separate bank account. Separate those business income and expenses, right? So yeah, if you have, and this is what you call commingled expenses. So if you have commingled expenses, that means you have, you know what I'm trying to say, personal expenses in your business account. That was a great question. If I didn't need an LLC, then what do I use? Then also, well, I will rewatch live. I thought you don't need an LLC to deduct business expenses. You don't really need anything. All you need is a business. And to have a business, you need to be doing an activity that makes you money. And you need to be doing this activity with continuity on a regular basis, right? So that's how the IRS qualifies business. Are you doing it to make money? Are you doing it to make a profit? And are you doing it on a regular basis? Really, if you can meet those two tests, you have a business. So that means you can take business deductions. There's this myth out here that you need an LLC to deduct business expenses, and it's not true at all. An LLC can deduct the same expenses as someone without an LLC. You don't need an LLC. What I do recommend you do is you have a separate bank account. At least a DBA and an EIN. That'll help. DBA stands for doing business as. But you don't even need that. But if you're going to start at the bare minimum, the cheapest way, DBA, EIN. Man, you need a YouTube. I have a YouTube channel. Guys, if you want to follow the YouTube channel, that'd be pretty cool. I'm going to re-upload this up on YouTube. Yes, makes sense. Thank you. You're welcome. I cashed out my 401k under the CARES Act so I could pay necessary bills. How do you know if you should? So yeah, there is a CARES Act provision that I really need to study again. But if you took money out your 401k, you may not have to pay the penalty, but you will have to pay the tax, right? So you're still going to be taxed. So if you took, you took $50,000 out your 401k, well, typically they're automatically hold 10% for your federal withholdings, right? So if you took out $50,000, they're going to hold $5,000. So you get $45,000. But you're still going to have to report $50,000 as additional income. So you're going to have to pay taxes on that $50,000. So if you took money out your retirement account, you may not have to pay the penalty, but you will have to pay the tax. Planning on moving to Texas, what's recommended? Dallas, of course. 1 DBA. Yeah, you can start with 1 DBA. Okay, thanks. You're welcome. As someone who lives in Texas, Becky, what's wrong with Texas? I love Texas. What's up, Tyler? Yeah, guys, these are all great questions. If you missed any part of this, this is a really good live. So anyone rewatching it that missed it, I'm gonna upload it on YouTube. Please rewatch it. It's really good. How do losses from the previous year offset profits from this year? So that's what's called a net operating loss. So if you have a loss in 1 year, you can carry it forward to other years. So let's say you had a loss of $10,000, right? You have a loss of $10,000 in 2019. A loss of $10,000 in 2019. In 2020, you had income at $10,000. You carry that loss forward up to 80%. So you can only carry 80% forward of your loss from your previous year. So you had a $10,000 loss last year. You can carry forward $8,000. So if you had a $10,000 income, you take that loss, 10 minus 8, you're only going to pay taxes on the $2,000. That's called a net operating loss. What's a DBA? A DBA is a doing business as. So that means, when you start your business, your business, Nailed by Queendom, when you start your business, you register your business name. Because once you start your business, you're just doing it under your name. So whatever your legal name is, that's how you're doing your business. Now, if you want to do your business as another name, right? So you can do marketing. So you can open up a business bank account. You want to at minimum is get a DBA. So your name, but I'm doing business as Nailed by Queendom, right? So that's what a DBA allows you to do, because if you don't have a DBA, you don't have an LLC or something like that, your business, the name of your business is your name and your social security number. That's the name of your business, right? I don't care what you call yourself. When you file your tax return, it's going to be your name and it's going to be your social security number. Any type of forms you fill out, it's going to be your name, your social security number. If you pay a contractor, it's going to be your name, your social security number. So the best way to separate that is to get a DBA, right? So you're no longer using your name, and an EIN. So you're no longer using your social security number, right? So a DBA replaces your name, and EIN replaces your social security number. And that way you can go open up a business bank account and other things. That was a really good question. I live in Dallas. Okay, I live in Dallas. How do I get started with that? So a DBA, you want to check with your county clerk's tax office, county's office. Thank you. You're so welcome. Thank you for saying thank you. If I put $680 cash in my savings account, you think I could get taxed on this? No, you won't get taxed on that. If you move money from your checking to your savings account, no, you won't pay taxes on it. But let's say you have income coming in and you put in your savings account, yeah. I don't know these things. Hi, what's up? Thank you. You're welcome. I love when you guys say thank you. I think there's not much to do here, and it's conservative. I just want to bring it back. God, this is a really good live, pretty active. What's the processing of transitioning assets into an LLC from a sub proprietorship? That's a great question. I'm not 100% sure. You probably have to get the assets in the LLC's name for that protection, but I'm not 100% sure. Yeah, that would make sense. To me, that would make sense that you would have to purchase the LLC would have to own the assets and not you. But I'm not 100% sure. I promise you I'm not. Hello, I have been collecting unemployment. How can I avoid paying taxes? Did you have withholdings? If you want to know an unemployment tax strategy, I did a video on that like 2 days ago. It's on YouTube. Go check it out. Great question. I'll look into it more myself, yeah. Why are people so obsessed with not paying taxes? I don't know, but guys, not paying taxes can be a good thing if you use it correctly. But it can also be a bad thing because if you're not paying taxes, that means you're not showing income. So let's say you want to apply for a home, right? They're gonna want to ask for 2 years of consistent income. If you're not having any income because you're not paying any taxes, you're not getting a home. Let's say you want to get a business loan. You want to take your business to the next level. Well, they're going to want to look at your business tax returns. If you're not showing any income because you don't want to pay any taxes, you're not gonna like do anything. So paying taxes is not a bad thing. And in fact, it shows that you have an income. It's going to be really hard for you to go to the next level in your life if you're not showing consistent income. Just ask yourself this question. Would you give a business money that's losing money? A business comes to you and says, hey, let me get about $50,000. And you say, okay, cool, yeah, you got a business, you look good. Can I see your tax returns so you can, I know you can pay it back. They show you their tax returns and they're just losses, right? Everything's negative. You're gonna be like, I don't think so. But let's say a business comes to you and say, hey, can I get about $50,000? They show you their tax return and it says like, I don't know, $250,000 in profit and income. You're like, oh, okay, I'm going to want to invest in them. It's the same thing when you're buying a house. They're like, oh, okay, you have a business, let me see your income. Here's my income. Would you sell someone a house that's not making any money? Or would you sell someone a house that's making money? So guys, just because you aren't paying taxes, like you don't want to pay taxes, it could backfire. And it's happened so many times. I've seen it so many times with clients. They come to me like, hey, can you fix this? I can't fix that unless it's incorrect. But because you guys want to pay no taxes, it can screw you over at the same time. So it's really important that you work with a tax professional and you play the long game. Like, hey, where do you want to go in your future? And that's something I do with my clients all the time. Like, hey, if this happens, this could happen. If this happens, this happens. And we come up with the best strategy possible. Woo! This is a really good live. Can I claim my haircut? I don't know about all that. Where do you think that money came from? Just pay your stinking taxes. It's not like you got unemployment to begin with, right? You probably not. Probably government. It's also like morally right to do paying taxes. Yeah. I'm on unemployment. I want to start a small business or a handmade soap. What's up, BC 121? Small business owner. Stoic. Candles. How can so the C program? You're gonna want to check with your state and see if your state offers it. Well, prior to 2008, they would have given you a home. Yep. If I do food delivery right now, how do I avoid EDD taxes? I got taxes this year using that. So like I'm not sure if I understand the question. If I do food delivery right now, how do I avoid EDD unemployment taxes? I got this year. I'm not 100%. I understand the question. If you're doing food delivery, you're considered self-employed, in my opinion. Unless you're doing something like DoorDash or something like that. Please reverse the camera. Freddie, can you teach me how to reverse the camera? Because I've been trying to reverse the camera the whole time. Unless I turn it around. If I turn it around, then I can't see the comments. But if you can tell me how I can reverse the camera so you guys can see it, that would be great. Teach me how, please. But yeah, if you're doing something like food delivery, the best thing you can do is track your miles. Please track your miles, and that will offset your income and possibly your unemployment income. So you may not have to pay any tax on it, but I hope that answered your question. The government is like $1 trillion in debt, so I don't know. Yep. Food deliveries is individual business. So most governments are very different than business. DoorDash, yeah. The DoorDash, you want to track your miles. How do I find a good tax professional? What about me? Hello, I'm a tax professional. You don't think I'm pretty good? But guys, Google in your area. Make sure you ask some questions. What's really important when you're looking for a tax professional is they have that communication. When they're speaking to you, can you understand what they're saying? Like, does it make sense, or are they kind of just blabbing? Like, because you really want to understand the strategies or the things that they're telling you. I can see perfectly fine. Look, there should be a button somewhere that looks like a reverse logo on the Uno card. Yeah, but it looks like a camera, but it doesn't like mirror it. So like on TikTok, like I can mirror my image. So you see how it mirrors it? So like on Instagram Live, this is what it looks like on Instagram Live. This is what it looks like on Instagram Live, right? So it looks like all backwards. On TikTok, I can flip it. Now you guys can read the board. I don't know how to flip it on Instagram Live. I'm in Texas. %. How much to the top? It really depends on your situation. But the best thing you can do when you want to know how much it's really just, Google's not going to help you. Like really having a consultation and talk to one will. First time I'm understanding taxes is when you're talking about, yay, that makes me so happy. That is my goal. So that was really nice for you to say that. So thank you so much. Thank you so much. Guys, if you're just joining this live, we pretty much covered like how taxes work with stocks. If you missed it, whether it's on Instagram or TikTok or Facebook, I'm going to upload it back on YouTube. This is a really good live. This is a really good live. It's very active. The questions are popping. So welcome, guys. You're helping me feel better about taxes too. Thank you so much. You want me to do my California taxes? You want to do absolutely sure. What do you learn your experience? I own a tax firm, and I have a lot of business clients, and I've just seen it. I haven't seen it all, but I've seen a lot. Do people really go to jail for filing tax wrong, or is that just some people finessing the big amounts? That's what people who avoid, not avoid, they evade paying taxes. So they owe the government taxes. They don't want to pay. The government says pay, pay, pay. You need to pay. You need to pay. You need to pay. They give them so many warnings. They just don't want to pay. So yeah, you can eventually go to jail for tax evasion. It's rare, but it can happen. Low key, I learned more about taxes from you than my mom, and she's been studying now. Awesome, your mom's studying to be an EA. That's so cool. That is so cool, guys. I'm going to start studying to be a certified tax coach. So I'm going to shit. Gosh, why did I should have like really built that up. Like, hey guys, it's something I want to share with you. I haven't told anybody else, but I'm gonna tell you guys. Because you guys, I love you guys, and you're on my live, and you want to care about taxes. So I'm going to share something with you guys that I haven't shared with anybody else. I don't know if I should do it. All right, I'm going to tell you. I'm studying to be a certified tax coach. That's how I should have built that up, but I just didn't build that up. It just slipped out so easily. Low-key learning more about taxes, yeah. Capital gains distribution of mutual funds, how to avoid. Not 100% sure. Financial guy, you should know that. You should know the answer to that question. But not 100% sure on that one. Unfortunately, I don't have experience in that. I wish I did. Hopefully, one day I will, and I will be able to answer that question. Samuel, you make it so easy. Why did I read Samuel? You make it so easy to understand. Thank you. You're absolutely welcome. We are special. Yeah. Thank you so much. That's awesome. Go you. 101 on YouTube? What? That is so cool. How 100 guys? That's so awesome. How did that happen? I just started YouTube like a couple weeks ago, maybe a month ago. We're already at 101. That is so cool. Oh my gosh. That makes me just want to make more videos for you guys. Thank you. That is so awesome. Yeah, but I do this live for you guys, and my goal is just to make this really easy to understand. Thank you. That makes me so happy. I'm 101 on YouTube. Wow. That makes me really happy. Because your energy is immaculate. Thank you so much. We love you. I love you guys. How does EDD take their money back? I'm not 100% on that one. I love your page. Thank you so much, Icy Code. That is so cool because you're good like that. That's so awesome. Congrats. Thank you. Yeah, guys. Yeah. So soon you'll see me as a certified tax coach, and you guys were the first ones to hear it. But that's what I'm studying to be. So I was really happy to share that with you guys. I haven't really shared it with anybody else. And I'm probably not gonna say anything about it till I actually get it. Like, so I hold up my plaque and say, "Look, guys, I did it." Yeah, but it's like I don't know. I just don't want to. I don't know. I shared it with you guys, so and it really slipped out. So yeah, what happens when EDD finds out you didn't qualify? I don't know that question. I specialize in taxes, and I feel like the unemployment, state laws. That's something you would straight up and down have to ask. So what happens? Yeah. What are the credentials to look for in a tax professional? If you're looking for a CPA, make sure they specialize in taxes. There are a lot of CPAs out there that don't specialize in taxes, but there are many that do. So really, you want to sit down and like ask them a question. Another good designation is enrolled agent, like EA. But I think if you're looking to save on taxes, you really want to work with someone who's like a certified tax coach, a certified tax planner, or a certified tax strategist. Those are people out there that really specialize in it. So it really depends on what you're looking for. If you're looking for, like I said, something general, something basic, like, hey, just help me with taxes, something like that. CPA is fine for that. And EA is fine for that. Enrolled agent is fine for that. It just makes sure when you're choosing, especially like a CPA, make sure they focus on taxes because there's a lot of CPAs that just do accounting work or audit work. Now there are many CPAs and there are many really good CPAs that focus on taxes. So just make sure that CPA focus on taxes. An enrolled agent is really good for if you have like they're enrolled agents are really good at tax planning too and tax preparation as well. But enrolled agents really specialize in solving your tax problems with the IRS. So let's say you owe the IRS money, or you have some problem with the IRS, you have back taxes, an enrolled agent is really good for that. If you're looking to save on taxes, save money on taxes, you want to look for a CTC or a certified tax coach, a certified tax planner, or a certified tax strategist, which is really like one of the highest levels you can really be. So I hope that helps. Someone to do LLC taxes, so you can work with any of those to do LLC taxes. Are you an accountant? What's the difference in tax professionals? There's really no same, just a designation. I'm an enrolled agent. Yeah. Guys, is there any more questions? Because I'm going to wrap up this live. And I'll be back tomorrow. Anything you guys want to... So on yesterday lives, people were like, they were saying, hey, can you do stocks? So that was the purpose of today's live. Anything that you guys wanted to learn tomorrow, you're welcome. If there's any topic that in specific that you would like me to cover tomorrow, that you have a hard time understanding and you would like more information on. What do tax workers charge different for your tax? I'm not sure what they. Is it possible to file taxes a year late? Yeah, you can file. Yeah, so to be compliant with the IRS, you have to have filed your last 6. To be compliant with the IRS, you have to have filed your past 6 years. That's compliance with the IRS. File your past 6 years. That's considered compliant. I-9 forms. I-9 is typically if you're hiring an employee. Guys, so if you have any more questions, I'm gonna hop off of here. This was a great live. And if you missed it, we covered what it looks like when we're talking about unrealized gains when it comes to selling stocks, what a realized gain is. After you realize the gain, hey, you want to ask yourself, is it short, is it long? And the example. If you missed any of that, I'm going to re-upload it on YouTube. You guys just told me on this live that I reached 101 subscribers, so thank you guys so much. I will be back tomorrow. Thank you, Instagram. Thank you, TikTok. And thank you, Facebook. We'll be back tomorrow. So guys, see ya. Bye-bye. Bye-bye.